is Ali Safavi. I'm the CEO and co-founder of COVU. And so I think we were talking internally, or we thought to do more to kind of help put out more Insurtech content. I mean, there's definitely not a shortage of Insurtech content for sure, but we thought it might not hurt to add a little bit of perspective on our end as well, and especially what we're trying to do here, of course, as mentioned before, is to talk more about the Insurtech trends, the investment activity, and some of like very kind of like core Insurtech, what's happening in the space, how has that changed, and so on. So for one of our first episodes, we thought who better to talk to than Eugenio Gonzalez, the Insurtech partner at Plug and Play, who obviously, as you guys know, Plug and Play has a very good amount of insights in the sense of what Insurtech is doing, what's happening, and what are the changes that is happening in the space. So I thought he has a lot of great insights to add. So we're gonna have a very casual chat. It's not scripted, so we'll just see how the conversation goes. But excited to talk more with Eugenio. So Eugenio, welcome to the podcast.
Thanks, Ali. Very, very happy to be here and chatting with you again.
Perfect. And as a fun fact, I also used to be at Plug and Play. I helped start the Insurtech practice at Plug and Play, and me and Eugenio worked together back then. So if I know a thing or two about Plug and Play, is because I had a little involvement there too. So the reason that we thought it's going to be fun to talk with Eugenio is because I kind of got to see a lot about what 2016, 17, and 18 of Insurtech looks like, and of course, as I left in 19, end of 19, I slowly I lost more and more of my insights in what's going on in the space. And that's where I thought it would be great to have Eugenio to kind of talk a little bit more about how Insurtech has evolved over the years. So let's start with this. Like when we started the Insurtech practice, I had a fun thing that I used to say, and that was everything can be Insurtech. It's like Insurtech could be defined as any technology that impacts insurance or help insurance improve or could impact risk. And when you think about it, it's very hard to find a technology that doesn't do one of these three things. So everything could be defined as Insurtech. I'm sure the definition has changed over the years. So let me ask you this. What do you define as Insurtech these days?
Yeah, happy to. So Plug and Play is a very interesting platform. So we have 535 corporate partners. Think of companies like Panasonic, Nintendo, PepsiCo, Progressive, etc. And all of these big folks come to us because they want innovation, which is another way to say that they want an edge over their competition. So they join the platform so that our team is able to bring the best and brightest in terms of entrepreneurs, and we help them with their open innovation efforts. We have offices all across the globe, a team of over 600 people globally, to help them reach all the different corners of the world in terms of innovation and provide and deliver different insights that we collect out of the platform. And what's interesting is within the platform, within Plug and Play, Insurtech is one of the biggest verticals. So we have over 80 partners ranging all the way from carriers, reinsurers, data providers, and brokers. And when you start aggregating all the data and insights that you collect from these folks, you can start seeing trends in the market. And those are the trends or insights that we leverage to make better investment decisions.
Perfect. And as a fun fact, I also used to be at Plug and Play. I helped start the Insurtech practice at Plug and Play, and me and Eugenio worked together back then. So if I know a thing or two about Plug and Play, is because I had a little involvement there too. So the reason that we thought it's going to be fun to talk with Eugenio is because I kind of got to see a lot about what 2016, 17, and 18 of Insurtech looks like, and of course, as I left in 19, end of 19, I slowly I lost more and more of my insights in what's going on in the space. And that's where I thought it would be great to have Eugenio to kind of talk a little bit more about how Insurtech has evolved over the years. So let's start with this. Like when we started the Insurtech practice, I had a fun thing that I used to say, and that was everything can be Insurtech. It's like Insurtech could be defined as any technology that impacts insurance or help insurance improve or could impact risk. And when you think about it, it's very hard to find a technology that doesn't do one of these three things. So everything could be defined as Insurtech. I'm sure the definition has changed over the years. So let me ask you this. What do you define as Insurtech these days?
I mean, it's difficult because, as you point out, insurance is it touches pretty much everything that we do, right? From the moment that you lease a car, when you rent an apartment, get renter's insurance, have a family, and get life insurance, or buy a house. Everything that we do is touched by insurance. But the way that we see it is we like to see it from a risk perspective, and where is risk and where's protection. And in everyday life, there's always a risk component associated to whatever you do, whether it's on the business side or on your personal life. And obviously that is the way that we would like to think about how should we protect the things that are nearest and dearest to us. And in that sense, it's the technology that enables risk assessment and protection of assets across the globe for us.
I remember, I mean, there's no clear definition. There's no Oxford dictionary of categories for Insurtech. So just bear with me. But I remember like back then, I used to categorize them as new products, new insurance products, or anything that helps with new products. Categories of things that could impact risk, like technology you should just be aware of that could impact risk. Like let's say blockchain or whatever that could create new risk categories or could change risk dynamics. And then enablement, like anything that could just like make the underwriting better, distribution better, or whatever else that is. So that was the three categories that I had for Insurtech. But I'm seeing categories all over the place. Do you guys have a way that you cluster these kind of Insurtechs or categories as Insurtechs right now?
I think, yeah, that's an interesting point. I think we like to take a more traditional approach to it, which is what are the sector specific? Because I feel like a lot of the innovation tends to happen, and it's not easy to bucket it as much as you can do a market map and try to say, hey, which are the companies that are playing in this enablement or how to better underwrite risk or whatnot. It usually changes, and the problem with those frameworks, in our opinion, is that you tend to miss out things that are not easily bucketed within those categories. So the traditional framework that we like to use that stands the test of time still is what is property and casualty, life and health, and then what's general. And personally, my favorite area is general because it has the broadest TAM. So the total addressable market of it can touch not only the property and casualty insurers, but also life and health insurers. And when you get to life, there's a good chance that it touches upon asset management. And within asset management, you then start branching out to banks and all that other fintech players.
Another thing that was cool is, again, like I want to go back to 2015 and 16 timeline, because I remember when we started Plug and Play Insurance, I was kind of like the ventures person, only person on it, looking at the insurance, and I started looking at the space, like who's out there, just like startups. And I remember I could only find like 20 companies that were pure Insurtech. So the rest of the list that we put together of Insurtechs were companies that could impact insurance, because there wasn't much. Like there was telematics companies and IoT companies, because these were such a hot topic back then, and I'm sure it still is. But there was a very few number of Insurtechs out there that we could, really like talk to or put in front of insurance companies. And then from the other part of the marketplace, you had insurance companies looking for technology. But the truth was, for the majority of insurance companies, it was such a new phenomenon that they had no idea, to be honest, like how to work with them, how to get exposure to them, and so on. So what happened was most of them just come in asking for exposure to insurance companies. And then by default, they were looking at like the hottest buzzwords, which were blockchain or AI or, like telematics. Telematics was such a big thing back then. It was like, there wasn't a company that wouldn't come through the door and asking for like, I just want to do telematics, because they're all worried about being disrupted on the auto insurance side. And then slowly over time, it evolved. They kind of got this sense of what are they looking for, if they were looking for some. And then at the same time, some people just shut down their innovation teams and stop working on innovation more, because it felt like there's no actual immediate ROI there. So let me ask you this: how do you think the space has evolved? Like, what's the difference between when we got started and today, in the sense of what the insurance companies are asking for?
Yeah, I think to your point, when I joined the Insurtech vertical, the practice, Insurtech wasn't for the longest time a category on its own. It was sort of like this weird, obscure place within fintech that touched insurance companies, which by nature deal with risks, so they're extremely risk averse, and there wasn't a lot happening back then. I think fast forward to today, and you see, I wouldn't say thousands and thousands of companies, but every semester we put together a list of what we think are the most interesting companies, 150 of them that play within the Insurtech space. Granted, not all of them are pure play Insurtech MGAs, but that are Insurtech relevant or adjacent or to some extent touch upon insurance. And you've seen it in the public markets as well. The number of IPOs, Root, SelectQuote, Metromile, Lemonade, Hippo, our portfolio company, all of them going public. So there's been a huge development over the course of the last, let's say, 6 or 7 years in terms of, one, the number of companies that have come out, but two, also the number of people that have got an interest in this particular space. And I think it's becoming less and less of an obscure area, and it helps, especially when you're starting to see exits at large companies. Covered Wallet being acquired by Aon, and then what is that team going to do, and are they going to start their next company? Is it going to be in the Insurtech space? And you get to see more of that momentum. But yeah, couldn't agree more. Some of the areas have changed. I think telematics is, and we can maybe dive into that later on, but the areas of interest have evolved over time. I think when you say blockchain, everyone runs through the door, and it goes up and down depending on the price of Bitcoin, more or less. But it's definitely a hotter space than it used to be.
Interesting. And on the other front, again, going back to the Insurtechs and kind of like the few that existed back then, I think the majority started with as an online agency, because I think for a lot of people, it was like the easiest place to kind of get access to people and disrupt. But then slowly over time, the MGAs were born as like going a little bit deeper into the value stack, but still very customer facing. And then you got like a lot of people outside of the insurance vertical, like the telematics players, that realize, look, I have all this data, I might as well, use that data to better price risk or bring that data into the insurance side. So there was a lot of plays there. What do you feel about like the evolution of the Insurtechs themselves? Like, what are the key learnings that you think Insurtechs have compared to when the space was younger, that has changed kind of like the value props that they're offering?
Yeah, no, a lot has changed. I think the first wave of Insurtech companies, I think they're mostly focused around personal lines, and you've probably saw this with the rise of companies like Hippo and Homeowners, Lemonade, Renters, Oscar and Health. I think Metromile, Root, and everyone that is doing personal auto, they quickly realized that it was having a different way of distribution was, I would say, an advantage. And to some extent, doing sales better, I think Peter Thiel says it's an innate advantage, even though the product isn't better. But I would argue that it's not a sustainable one. And to some extent, and when the large incumbents realized that they needed to up their game and start competing with them on different distribution channels, you realize how hard it is to sell a commoditized product. And when you're competing with folks like Geico, Progressive, and all these big budget companies that are spending billions in marketing and have millions of viewers of their videos on YouTube, you need to have a different strategy. And you've seen it in the public markets, the price of those companies have come down very, very aggressively. We're seeing even Metromile, I think, was acquired by pennies on the dollar. I think some of the lessons there are you not only need to have a better product and a more clever distribution, but my main takeaway of that whole Insurtech 1.0 wave, and I think my good friend Ian White did a couple of great blog posts around it, is what does growth mean? And I think for the longest time, we were rewarding growing at any pace as a measurement of you're doing great and its success. But within insurance in particular, it's very hard to grow fast without filling your book of business with a lot of just a ton of bad risk, right? Yeah. Exactly. And so a lot of these folks realized that their loss ratios weren't actually coming down as much as they expected, because the promise there was like, look, we're a tech company. We know data better than these folks, even though they've been doing it for thousands of years, probably. And so we're going to compete with them head on and try to win this. And with technology, we're going to save ourselves and have those loss ratios come down. We're a lot lighter, so the total combined ratio is going to be lower as well, blah, 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 blah. Then they realized that they were just doing bad underwriting, a ton of easy distribution. And so just people that have a phone aren't necessarily the best customers for you. And I think that's one of the things that you realized after this whole Insurtech 1.0 wave is growing at any cost. I mean, the cost of growing is real, and it's not just burning dollars for the sake of it. You need to do responsible underwriting, if you will.
No, I think a very good point to kind of like add to it is that when Insurtech got started, a lot of people thought, okay, so I'm digital, I'm going to be able to compete with insurance companies. But then they slowly realized like the OPEX cost of insurance, when you look at the balance sheet, it's like less than 10% or 9%. So it's not like a massive amount of margin that by just digitalizing your business, you could like just make insurance massively cheaper in a sense. I think another part that you just touched on is like they thought they'll be better at distribution than insurance companies, and then they quickly realized, the BTC channel is just a very tough channel. And just because you're digital, people are not going to buy from you. I mean, in a lot of cases, people either have to be sold or they're just going to default on the cheapest product. Even if it's not digital, it doesn't have to be digital for them to buy it. It's a good to have. It's not a must to have. And another fun fact that I think a lot of people picked up on is they do have a little bit of anti-selection going for them because some cases I think they just underpriced the market, and then obviously they got penalized with the bad loss ratios that came in, and they have a massive anti-selection because they were giving good prices to people that other people didn't want, and that's why the prices were so high for them. And when you add that to the fact that a lot of the customers you attract online are price shoppers, a lot of the LTV assumptions were also wrong, which meant the customers that you thought are going to stay with you for 10 years ended up leaving in 2 or 3 years, because when you bring your rates up to kind of like be a little bit more profitable, are going to just jump and leave and so on. So definitely a lot of interesting learning. So it sounds like the space is pushed, and this is another thing that I picked up when I went to ITC last year. Is I was asking a lot of investors, like, what are you excited about, or what are you seeing in the space? And I think this push of moving away from commoditized product has sparked a lot of interest in niche MGA products. So it sounds like to be a trend now, huh? Is that like a big thing you're seeing right now?
Yeah, I think you're spot on that. We did this panel not too long ago on specialty lines. I think it was the not this year's ITC, the one before that. We're in a panel with Tyre Burks, the CEO of Players Health, Tomer Kashi, the CEO of Boom Insurance, and Arlene Kern from Munich Re, and it was all around the exact same thing that we spoke about. First wave, personal lines, ton of commoditized product, too much competition erodes margins. It's not great. Specialty lines are somewhat of an overlooked market. To your point, I think what's interesting is we're starting to see more and more MGAs now focus on commercial lines and specialty lines that haven't been touched or are largely overlooked by big incumbents, where the distribution is not as intuitive, but also where you need to rely heavily on either agents and brokers. And I think that's one of the other things that a lot of the Insurtech 1.0 folks thought, hey, this middleman, that the agents, we should try to get rid of them and just go direct to consumer and try to find our way to reduce that cost. And they realized that they own the relationships, that it's basically impossible. And I think pretty much everyone went back and tried to then sell their products through agents. And I think Lemonade and everyone else did it. When you realize that you need to rely on the relationships that these guys have built for a long, long time, right? So I think we're seeing more and more MGAs focus on those lines that are a little bit more obscure, but are interesting. I think a few interesting MGAs. I mentioned Tomer. So Boom is doing something very, very cool around small private airplanes, and the first product for a pay-per-mile motorcycle. They had one for different mobility products. I think Red Kick is doing something very interesting, an MGA out of Europe for transportation and commercial freight. Then you have Coffee Labs, which is another interesting one. Commercial auto, a segment of the market that's been underperforming for the better part of the last 10 years, where all the carriers have just sold their book of business, retire, leave, because the loss ratios are unsustainable. You get an MGA doing better responsible underwriting, managing risk properly with a better model, a better way to understand the risk that they're getting on their balance sheet, or potentially will get into the balance sheet. They're bringing up, and I see a lot of MGAs now creating captives to try to capture some of that unit economics that they were passing on to other folks. super interesting MGAs, and a lot more interesting. Like if I were to see another MGA doing personal auto, I would be like, oh my God, no, please no. But if you tell me like, hey, there's someone doing something interesting in this area that hasn't been, or that we haven't seen a ton lately, I would take another look at it for sure.
Just to recapture what you just said, I think I agree with you, especially on the few points that I think to start an MGA today, you need to have like somehow a competitive advantage. It's not just about being digital, which 4 years ago, 5 years ago, it was all about like, look, I have a digital same thing that existed before, and now I think a big key learning is that you need to have you have to have an advantage, which advantage could come in the form of I have a special risk data that other people don't have, so I could just underwrite this better.
Yeah.
And another funny fact that is that I think a lot of people who started doing that are people that try to sell the risk data to insurance companies and realized it will be too hard for them to use it in their underwriting or risk models, or like, I'm gonna be better off if I just do it myself. And they moved into doing this. But the risk data is one that is very key. So advantage on the risk models. The second one that I realized is like an advantage on risk management. So it's like, look, I could just have a much more profitable book because I could manage the risk better with this technology or tool that I'm using. Or third, some sort of advantage on distribution, which is like, the whole Zenefits model. I'm going to give you free tools, and then off of that, I'm going to sell insurance to you as well. That just gives you a massive advantage. So you need to have some sort of a very key advantage or key insight that other people don't have.
No, for sure. And I think what's interesting, the first point that you mentioned, a lot of people that have a SaaS tool they were selling to insurance, they realized, hey, the TAM is not that big. There are not that many carriers that want to use this. If I have a better secret sauce and a better way to underwrite the product, might as well become an MGA and start selling it myself, which is interesting. And we've seen it with a couple of MGAs in our portfolio that did that shift. And then the other one that you mentioned around Zenefits, I think that was sort of like the proto embedded insurance play, right? Embedded insurance is arguably one of the hottest sectors in the market, but it didn't exist as a category, I would say maybe 2 or 3 years ago. No one was thinking about it. And then when Extend, that's now a billion-something company, they were selling warranties, embedded warranties. No one was thinking about, hey, this is embedded insurance, but it made absolute sense. And I think a lot of people, and why so many folks think about fintech as every company is going to be a fintech company, it's because you start seeing how you can now, if you sell a product, then you can insure it. And then that means that you can get better economics there, or potentially increase the revenue streams that you have. You want to sell protection, warranties, if you do wearables or health, you can sell life insurance, etc.
So let's shift the gear and go to distribution, because you spoke about a few things and I want to bring it back together. So one front was everyone started with B2C distribution, like, hey, I'm just going to go and acquire customers online. And then they realized, the CACs are high, the LTVs are low, the customers you get are just price shoppers. You can't really cross-sell them, upsell them, you don't have an engagement with them and so on. But then the model shifted to two major trends. One is going for independent agency channel, like agency channel as a whole, and the embedded play. Both became much hotter topics, because the truth is 91% of all insurance distribution today is actually sitting with agencies. What Progressive calls the Robinsons. It's very hard to find them online. You need to go after people that are with agents who have assets, and you could actually work with them. And then you have the embedded play. So let's talk about these a little bit more. So when in 2016 or 17, there weren't that many big agency plays. The agency market was dominated with this old school kind of companies that existed, or a lot of them like to say we're Insurtechs before Insurtechs. But then slowly over time, we saw a rise in like companies coming to the agency space. But then I think the two key problems a lot of people ran into, they realized, and it's actually funny, a lot of the agency plays are B2C plays that couldn't make B2C work and moved into agency play. But a lot of people realize making money from a small to medium-sized agencies is almost impossible, which that's why they either pivoted into like providing market access and making money on premium, or going upstream to like large brokers and large commercial brokers and so on. So tell me a little bit more about like what you're seeing in the agency tech space or the broker tech space, and what are some of the exciting trends or key learnings that, how the space has evolved.
To your point, a lot of agents realize that, or a lot of entrepreneurs realize that agencies were a key component to the distribution of insurance products. And for a long time, they had been also overlooked, right? There's not a ton of technology going into them, not a ton of automation. And what was key here is agents don't want to spend their time setting up websites. Agents don't want to spend their time figuring out what's the optimal SEO so that they can drive or attract more clicks into their websites and what the conversion rates are like. Agents want to spend time doing what they do, which is selling and catering to customers, right? So to us, and a core part of our thesis was anything that enables or enhances the capabilities, sort of like tech enhanced agency, it was a core piece of what we were doing. That's why what we love COVU, obviously. That's why other startups like Finally that enable credit card and automating of all the accounting of an agency are great, because you free up time so that agents can actually dedicate themselves to what they do best, which is non-managing the back office, right? The back office automation should be a key component if you want to compete in the agent market. And for that reason, everything that goes into it is super important.
So now let me tell you the insight, because I don't know, you probably know, but like this is what I learned from this side of the table. I don't know. Like I know carriers want better agencies and like to improve them and all that, but I don't know how much they really want to improve the agent performance and how much are they actually investing in it. Like from one side I've heard them saying it, but from the investment of technology and time, I haven't seen a ton. That could be independent agencies, or it could be even captive agency channels, frankly, like by speaking to some of the larger captive agency insurance companies. What have you seen? Like have you seen like actual like big partnerships that carriers are spending actual dollars, time, and resources into their IA channel or captive agency channel? Because from one side they say they care, but at the same time I just don't see it in action. I've seen more interest in like investing in like MGA products or launching new products, or even like direct channels if they could launch some, and like all these little startup ventures initiatives that they have within the carrier.
Yeah, I think every carrier is different and they have their own set of, I guess, priorities. But we've definitely seen this year people catering to be able, or carriers worried about what are the products that their agents can sell. If you have captives, how can you better increase the menu of products that they can deliver? If you don't have captive agents, what could make your product stand out for other agents that can basically pick or offer any other products, right? And so I think there's definitely going, even though it's not probably the part that gets the most amount of attention right now, but there's definitely some interest from carriers to be able to enhance agents. Granted, I agree with you, it's probably not the area that gets the most attention, the most amount of dollars, but it's certainly not an overlooked area as others are. I think, for instance, reinsurance doesn't get as much attention as it should, and probably more dollars should go to it. The brokerage side and how you deal with that, it's a lot more broken than it should be, but well, here we are.
All right, so tell me how you compare that to embedded, because embedded sounds to be the hottest topic. It's to be honest with you, I'm a little bit I have questions around embedded. I think it's a little bit overhyped. I think embedded makes sense. Look, it's like this. In theory, digital insurtechs could provide a better customer experience on an agency. In theory, because it's digital, because you could use AI and technology. The reality of it is that what I learned, at least, is people still want to talk to people. Like I think 60% of people that we surveyed wanted to actually talk to a human when they want to buy something. 80% of people who fill out the auto insurance application online, they buy after talking to someone. So there's a lot of things that are in reality very different from the investor world or like the thesis world and like all these like research from McKinsey and so on that I've noticed. So embedded is one of those. Is like in practice, I understand the philosophy, which is we'll be there when the customer wants to buy, and we'll show them auto insurance quotes. It's going to be easy. It's going to be quick. They'll just got to buy it. The customer behavior that I've seen is like a lot of people already have an existing relationship somewhere, either being a Geico or an agency or an agent or competing, whatever that is. And the behavior of buying from embedded channels, except for like products like warranty, maybe like, I'm buying a headphone and quickly I just want to, I want to get a little protection for it. I haven't seen it super successful yet. And I know a lot of people are talking about it now, but it hasn't been a super new topic. Like even in 2016 or 15, we had a lot of companies that were embedded, and to be frank, I don't know if I would call them like super successful yet, in the sense of like how fast they've grown and so on. So What are the biggest wins in the embedded channel, and how what are you seeing, and how big are insurance companies on it, in a sense?
So embedded has been around. It's just not called embedded, or it wasn't called embedded back then. I think one of the best or most successful plays that I saw early on is, I think, Turo with Liberty Mutual. When you were able to rent a car within the Turo network, you're able to access this thing called Turo Shield, which is a very funny way to not call it insurance. And obviously insurance has a pretty bad NPS, and it's a financial product that people always pay for it but don't use it, and when they have to use it, it's because of a bad thing. So it has this all this sort of like negative connotations to it. I think that's one that I think works pretty well. And then obviously we talked about Extend. They're unicorn now, so that's pretty cool. I think what Rohan and the rest of the team, Woody, there have done is nothing short of stellar. But to your point, will everyone buy insurance just because it's embedded? No. And that speaks a little bit about what a lot of the Insurtech 1.0 folks realize is, yes, humans want to interact with humans. And I think that there's a point where people, and that point is probably price. You're more willing to make a decision about acquiring insurance if the price point is less than X. And over that threshold, which might vary for different products, or it might vary given the customer segment, they'll want to talk to someone. They want to feel like they're being advised. They'll want to see a face that they can trust, and all that sort of stuff. That's probably why you see like the Ladder Life, the Ethos, and all those folks being able to sell life insurance policies of a certain range. But when it comes to going above and beyond, I think it hasn't been as successful as a lot of people thought it would be at the beginning.
Yeah, especially some products is really sold, it's not bought, and embedded is really a concept of being bought. I mean, that's another thing. People are just wired in a very special way in life. You just need to push them, sell them, and so on. But I think for travel insurance, obviously, it's been very successful. I think for products that are immediate, urgent, for some part, it makes a lot of sense. But I think the amount of hype around it is a little bit more than I think, because like I think it's still in the future. Agency channels are going to be big. You're going to have a lot of even potentially direct, but embedded is going to be part of distribution. But I don't know if it's going to be like a large portion of it, or a very large portion of it. But let's see. I mean, over 5 to 10 years, the world could be a different place. But at least in the next few years.
To your point, I think a lot of people thought about the promise of parametric insurance is that by now everyone would be like every single claim would
you
be
get
triggered.
into a car accident and you automatically have your money in your account. Yeah.
And like, oh, there's an earthquake, you'll get paid immediately, and there's IoT devices everywhere, and there's a climate event, and that'll trigger the policy paying. Like, I don't think people actually care about that as much as they care about price, and that's one of the biggest learnings as well out of all that thing.
So it's funny, like I did the survey with people, and I realized 70% of people want the right amount of insurance. They want the protection. They want it. In reality, don't buy it though. That's not how they operate. Like they want it, but that doesn't mean like they're gonna buy it. I realize you have to educate them, you have to massage them, you have to push them, you have to that's why the whole agent role becomes interesting. And we built an AI that would give recommendations to people. But the truth was that when the AI would give a recommendation, people would like spend 5 seconds on it. But then when I would sit down and explain it to them, I would get an hour of their time and 3 question opportunities, which is so different when you had that human touch, the human personalization, that trust that comes from a human versus like a machine. It just goes a very long way in insurance. And I think people underappreciate it. So now thinking of the hype cycle, like again, to go back, like we had blockchain, we had telematics, we had embedded, we had this and that, and blah, 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 blah. I'm sure a lot of insurance companies looked at it, and because in the beginning they were scared. It's like, oh my God, Travelers is doing this. I should jump into it too, because otherwise I'm going to be disrupted. Auto insurance is going to go away. What am I going to do and all of that? So the hype cycle has flattened a little. It's not looking like we're talking about more realistic, thought out, thoughtful kind of like problems to solve and solutions to build. What are you hearing or feeling from that, hype cycle from insurance companies? And again, I don't want to bucket them all into the one category, because my experience was like some are a little bit more advanced in terms of how they're thinking. And again, some are even shutting down the innovation teams because they feel like this is too long term and they just don't want to invest in it. So what's the latest there? Where are we on the hype cycle, and how big is that innovation urgency, I would say, for insurance companies.
Yeah, to your point, I think telematics is one that a lot of people were, especially at the beginning, IoT devices, everyone's like OBD devices, everyone's like raving about those, and we never saw them getting off of the ground as much. I think where we see a lot of interest right now, definitely Gen Zs. I think you and I were talking about this before we started this chat, but it's been the way that we survey our existing network of corporate partners, and we ask them very often what are the most pressing areas that they're looking at, and we'll show them what the startups out of that space are coming up with, or where's there a gap, right? If they want to see more of this, and the market is only providing X amount of startups in this area, there's a gap that might be needed to be filled. I think the most interesting area for us by far and large right now is Gen Z. And there's a few reasons for it. I think the first one is how big they are, obviously. I think Gen Zs make up something like 20% of the population. They're all starting to get into the workforce. They started graduating during COVID. They're 1 in 5, at least worldwide. I think they're going to be something like 68 million going forward, at least if I'm not mistaken, in the US. They have very interesting characteristics like they're incredibly diverse. I think 1 in 4 is Latinx, which is very refreshing. But in terms of what they mean is there's a new wave of consumers that insurance companies aren't quite equipped to talk to, and they're trying to figure out what's the best way to approach them. Over the course of the next 5 years, I think, and this is from a survey from our partner EY, they're going to grow their spending by 70%. And insurance companies right now are focused on a demographic that's a lot more old. But if people are entering the workforce, growing their spending, and they're going to start getting married, going to start acquiring cars, going to start, doing a lot of the things that matter to insurance companies and acquiring all these assets that need to be protected, how are they addressing it? And I think some of the trends that our corporate partners are more focused on tend to be around distribution channels, back to what we were just talking at the beginning. How do you tap into this whole demographic of people that don't have the same habits that that millennials, my generation, had, right? Like, I'm close to being 40 years old. I don't spend as much time on TikTok. I don't even have a TikTok account as these folks do. And when we looked at what the insurance companies were doing on TikTok, we realized like it's pretty bad. And there's so much room for improvement. It's crazy. I think only State Farm is doing something interesting with Jake from State Farm, funny enough. And then you see like other insurtech companies taking the lead there. Next Insurance is doing something interesting because you realize that Gen Zs are one of the most entrepreneurial generations ever, and everyone wants to be their own boss. And that's part of the reason why insurance companies have so much trouble attracting and retaining that cohort or that demographic into their own companies. So a lot of interesting things. And I personally think that given the amount of time that they spend online, given the amount of time that they'll be doing online shopping, given the amount of time that they will be spending on potentially metaverses. I think Oculus was the #1 app last Christmas. We expected it'll be the same this Christmas as well. You're going to see, or I think at least the next wave of what's the more interesting topic, it's definitely going to be cyber. And I think a lot of people are brushing this off and are not paying as much attention, but the amount of cyber attacks has only increased. The amount of cyber insurance has remained somewhat relatively flat. I think most of the value is being captured by consultants, whether on the pre-breach or restoration side. And so I think we're going to move on to a space where every insurance company is going to have some semblance of cyber protection for their insureds, for their policyholders. And that's a lot of things that I feel like not a ton of people are spending time on, and people need to catch up, especially agents will need to catch up. And like, what is the best assessment? What is the best way to assess a customer? How do I continuously underwrite them? all those sort of things are not very intuitive, and you need to be a little bit more fine-tuned to the technology side on how those things work. But those two are probably the main area. Gen Zs and cyber are probably the areas I think are going to be growing up the most going forward.
How urgent do you think is the need for innovation for insurance companies? Not in a sense of what you think the reality is, more like in a sense of how you feel they feel about this. Because, like the reason plug and play Insurtech was the fastest growing vertical plug and play back in the day was Insurtech was hot. Like they were just so desperate to see what's going on. And they had this urgency to just like invest in it, spend time in it, put resources. It was a priority. Do you still think it's a priority? Do you still think it's more priority or less of a priority? Or like, because I have a feeling that in some cases, because they realize they're not being disrupted as fast as they thought, maybe like they maybe slowed down in some areas. But generally, do you think it's like as much of a priority as it was, or even more than what it was?
Yeah, I don't think it has stopped at all. I think what we're going to see now, and so let me put it this way. Usually when there are recessions, the first thing that gets cut off is the innovation budget. And we thought during 2020, in the middle of COVID, a lot of corporates were going to get hit with that. We actually saw an increase in engagement from the corporates, because I think that they're starting to realize that if they don't invest in this constantly, that the one that actually does it is going to overtake them. And it's already too difficult to catch up to the leaders in the market, especially ones that are spending aggressively in computer scientists, in technology capabilities, in digital distribution, in upgrading some things are as basic as like moving from on-prem onto the cloud. So back to your question, I think it hasn't stopped in terms of innovation. They're aggressively spending. I think budgets are getting bigger. Innovation teams are getting bigger, because the moment that you stop thinking about this as if it's actually not a problem, you're going to realize that you've lost too much it'll be too difficult to catch up with the next people.
But what I'm hearing from you is that consistently you feel like innovation is there, the focus and priority is there. They've realized that, and maybe they've changed their approach to it, but that's still the case, and they're still very urgent in adapting technology or just changing their business models and so on.
Yeah, for sure. I mean, from the incumbent perspective, we've seen a lot of folks trying to come, especially when they come to plug and play. So it's a lot of folks were at the very beginning coming to us to see like the petting zoo, and like, oh, these startups are cool, and how do we work with them? And they don't even they didn't even have the capabilities to do it. So a very common thing was like, if you're working with a startup, they'll send them an NDA that's so aggressive that all the POC money that they're going to get is going to be spent on legal fees, right? And you put them through a procurement process that's so aggressive that getting something done with them is going to take like 12 months, which is bananas. So a lot of folks have gotten better at working with startups, and we were starting to see like a lot. Our partner Tokyo Marine just launched their own CVC, and we're seeing more and more folks are getting better at it and still engage with us, even though their internal capabilities have evolved, and they're co-investing with us as well.
So with the market, this last question, because we're going to jump, but 2023, how the fundraising environment and everything else, how's that going to impact Insurtech, do you think?
Oh, good question. So I think that the best entrepreneurs will always find a way to fundraise. And I just hopped off of a call with an entrepreneur that's absolutely crushing it, growing over 200% year over year, GWP over 20 million, 5 million in revenue. So I don't expect that startup to have any trouble at all raising, even though it's sort of like a Series B company now. I think from an investor standpoint, this is arguably the best time to be investing in startups, because we're probably going to see the next wave of great companies being built right now. A lot of the tourists are going to be leaving, which is good. And it's great for the incumbents as well. They're going to be able to consolidate and acquire a bunch of different startups, upgrade their technical capabilities, upgrade their talent capabilities, so they're going to be able to acquire a bunch of engineers. That means that there's going to be a ton of exits. That means there's going to be a ton of investment, or teams are going to be out potentially creating and building new things.
I think companies are going to start acquiring companies too, like insurance acquisitions of Insurtech?
Oh, for sure. We've gotten a good deal amount of requests from our partners.
That means like it's a great time to invest, yeah, because there's going to be a lot of buyers in the market, so
Correct.
there's more acquisitions and so on.
Yeah.
That's great. Good, Eugenio, my friend, my amigo, always a pleasure.
Thank you, Ali. It's been a pleasure.
Of course, and this is again like the first actual podcast we're doing. So before this, it's just the intro meeting. So thanks for making time. I hope everyone enjoyed this podcast, and please let us know if you have any feedback or any questions. Have a great day. Bye.
Thank you, Ali. Bye-bye.